In today's video, let's set up project work. So specifically, we will look into the information request, the agenda for the kickoff workshop, and the legal entities in scope. So let's do a quick jump through. First, we will look into the information request slide that you can see here. So we will request information for preparing short-term liquidity, the integrated business plan, and the operations and strategy assessment. Then next, we will have a look into the kickoff workshop agenda, which you can see here. And finally, we got this slide for the legal entities that are in scope, where it gets a bit nitty-gritty really, but I'll keep this as short as possible. So that's what we got for today. Let's zoom back in on the information request slide. And here there are a few things to note before we dive into the details. First, send this out as soon as possible. If you lose a day here, this might put you under a lot of pressure at the beginning of the project. Second, keep track of this rather in an Excel file than in a slide. So this slide is just for illustration purposes, but it's much more useful to use an Excel file to track this. And third, in restructuring, the information request is much more standardized than in a strategy consulting project, in which it is much more customized. So let's start with short-term liquidity, what we need for the financial status and the 13 weeks liquidity forecast. We need an overview of the group's legal structure, including information on cash pooling, trapped cash, and profit and loss transfer agreements. So, as this case, to keep it a bit more simple, is focused on a single entity only, and we're not doing any group accounting around here. We don't need all of this, so here we really need the legal structure of the group to showcase where we are really in. But other than that, the other things like cash pooling, trapped cash, and profit loss transfer agreements are not in scope here. For the legal entities in scope, and specifically for the one that we are looking into in this case, we need an overview of the bank accounts and the loans. So that is including a schedule of the repayments and the interest payments that we need to pay for both existing and planned loans. We need an export of the booked payables and receivables, which we can get from the accounting department, who can get us from the ERP system. We need a schedule of any deferred payments if there are already any. We need the payroll. We need the investments and depreciation plan. So depreciation is actually not for short-term liquidity, but as these are closely linked to the investments, it just makes sense to ask for both at the same time. We need the client's base plan of the income statement. Sooner or later, we will replace this with our own version of the plan that we will come up with in the integrated business plan work package. And we need the order book and opportunity lists, which kind of perform the top line, so sales in the base plan as well. But we will just ask for this separately to be able to break this further down if need be. And we need information on any measures that might have been applied, such as factoring. Now, while there are some things that we can reuse from short-term liquidity for the integrated business plan, like for example payroll or the investments, there are some more things that we need to request. Starting with the annual reports from the last 3 years. Second, an export of all the income statement and balance sheet accounts from the last 3 years on a monthly level. As you can see here, this comes at 2 different levels of detail, and we need to make sure that the numbers that we show go together with other sources, let's say, which will be nitty-gritty. We have the base plan excluding measures. Minimum cash is something you might require to run the stores because you may want to have some cash in the stores, and information on net losses carried forward is something that has tax implications. And finally, for operations and strategy, we need an organizational structure, including a breakdown of the FTE. We will want to ask for diagrams and descriptions of the sales processes, as we want to have a deeper look into benchmarking store sales intensity. And then internal strategy papers and market study, as well as information on key industry trends. Here, always remember that you as a restructuring consultant always come from a functional perspective, whereas the C-level of your client will typically have an industry specialization. They will know a lot about, for example, fashion retail or any other industry that they're in. So here, just leverage that and ask them for this. They will know a lot about this. This can really save you some money on expert interviews that you would have to do otherwise. And also regarding the most important regulations, they will just know. Typically, there are 2 or 3 things that you should just be aware of. Also, when it comes to ideating measures, there might be some things that you just can't do, but you may not be aware of this. So to give a brief example here, in wealth management, you're only allowed to steer your sales force based on the assets under management that they bring in. But for example, if they bring in cash, you're not allowed to tell them, hey, this cash needs to be invested by 50% into shares or something like that. So that's just something you need to know, because otherwise you might steer them based on revenue categories or your top line based on revenue categories, and you're not supposed to do that. So next, let's see what we're gonna do in the kickoff workshop. Here the goal is really twofold. So it's about getting to know your client on a personal level and aligning on immediate priorities and the overall approach, so that eventually you arrive at a joint commitment towards the way forward. So this is not a highly structured workshop. Also use that opportunity to get to know the client on a personal level. It might just be that their family's business heritage is literally in your hands, so build trust here. In terms of the participants, you usually have the C-level around. If there's already a chief restructuring officer in place, they should be invited. There may be some other C-level board members, like for example a product officer. Controlling and accounting, well, this depends. Sometimes they do not have a CFO, and then it makes sense to have controlling and accounting at the table, because you will need a lot of financial data. And always make sure that the entire consulting team is there, because this is an opportunity to ask so-called stupid questions that you may not feel comfortable asking after a week or two. Now for the agenda, we first do a short introduction to get to know each other. Then we have the situation and complications, something you will remember from my first video in this series. Immediate priorities and overall approach, so there might be some things that just need to be done immediately and you should know about this. Responsibilities and limitations. Here let me highlight the limitations. So we had this case in which we were not allowed to ask anyone else besides the C-level for information, so even the controlling and the accounting department didn't even know that we were there, and this is something that you should just be aware of. Meeting update cadence, nothing too spectacular, when we will meet next, which deliverables should be prepared by then, and so on. So overall, this shouldn't take longer than 2 hours, and then you're ready to go. So next, let's look into the legal structure and see what's in scope here. First, I should mention that while this case study is entirely fictitious, it's been adapted to closely resemble existing fashion retailer structures. So here at the top, we get this postbox kind of thing from Bermuda, and right underneath it, for each of the countries, that old fashion actually operates in several legal entities. Here we are primarily interested in the German retail and sourcing business, and we will also have a closer look into its relationships with the suppliers from Vietnam that it owns, as well as the German wholesale business. So let's go through the comments on the right hand side. First, the retail and sourcing business licenses the old fashioned brand from the holding, which owns all of its local businesses 100%. Second, as I just mentioned, there's those suppliers from Asia, from which the retail and sourcing business sources its goods and sells them through some 40 brick-and-mortar stores across Germany. And third, the wholesale business is an internal customer of the retail and sourcing business from Germany that offers fashion, without labels that is, to wholesale chains for sale under their own sub-brands. Regarding comment number 3, I should also mention that the retail and sourcing business has some 3.4 million euros in book due receivables that it expects to collect from the wholesale business, but the wholesale business then expects to get paid itself by its own external customers, warehouse chains that is, soon. And here factoring would be an option to collect the money faster, but in exchange for that you would lose a bit of money for factoring fees. Now, to keep the case focused here, we will not plan these internal sales and material expenses and so on to the wholesale business, so this case study is really centered around the retail and sourcing business, specifically the retail business, and I added the wholesale business to this case to show some of the intricacies of liquidity planning. Finally, you might wonder why we have this inefficient legal structure really here. So the reason for that is these businesses were M&A'd over time, which is common really. So the German old-fashioned business was actually a distressed M&A deal and never properly integrated. You could argue that sourcing should be handled centrally, for example from Belgium, where there seem to be most of the other central functions, but here it's just the way it is, and legal constructs are not perfect. So that's already it for today. Next time, join me for an in-depth walkthrough of the PowerPoint strawman, one of the most important things really there is to strategy consulting work. And then that's already it for setting up the project and the introduction in January, so we can get right started with phase 1 and the first work package, planning short-term liquidity.